Hey guys, how are you? How's it going? And welcome to the very first episode of the quarterly series from scratch. Every video in this series will cover quarterly series step by step, beginning to end. Today we'll be covering the introduction to quarterly series, what it is and how it works. This video will split into two parts. The first part, which you're watching right now on YouTube, is completely free. The full video with additional information will be posted for Discord premium members for those who want to learn quarterly theory on a deeper level. All the links are going to be in the description, so let's get started. So what is quarterly theory? The quarterly theory is a time-based trading framework created by Trader Day. The core idea is simple. Every significant time period on a chart divides into 4 quarters, and each quarter has a specific purpose. Most traders focus only on price, where is support, where is resistance, but without understanding when price is supposed to move, you're essentially trading blind. QT solves that. Gives you clear time-based reference points so you always know what the market is most likely doing right now and what it's about to do next. When you combine quarterly theory with ICT concept, you stop guessing and start anticipating. So quarterly theory is a time-based framework for reading market and cycles. Every time period divides into 4 quarters. Quarterly theory eliminates guesswork and gives you exact timing for entries. And what are we doing? We're basically blending quarterly theory time with ICT price. So let's talk about how time is divided in the quarterly theory now. Every time period from a full year down to a single trading session splits into 4 quarters, starting with the biggest, the yearly cycle. In the yearly cycle, Q1 is gonna be the January, February, and March. Q2, April, May, and June. Q3, July, August, and September. Q4, October, November, December. The next cycle is a monthly cycle, when in each month splits into 4 weeks. Week 1 is Q1, week 2 is Q2, week 3 is Q3, week 4 is Q4. Important to understand that in a monthly cycle, Q1 starts from the first full week of the month. The next cycle is a weekly cycle, when Monday is Q1, Tuesday Q2, Wednesday Q3, and Thursday Q4. The Friday isn't a quarter. Friday has its own unique role. It doesn't count as a quarter in a weekly cycle. Now, the daily cycle. A trading day splits into 4 6-hour quarters, when Q1 is the Asia session from 6 p.m. to 12 a.m. Q2 is London from 12 a.m. to 6 a.m. Q3 is New York AM from 6 a.m. to 12 p.m. and Q4 is the New York PM from 12 p.m. to 6 p.m. The next cycle is the 90-minute cycle, when each daily quarter splits into 4 90-minute quarters. That's an hour and a half each. New York AM, for example, runs Q1 from 6 a.m. to 7:30 a.m., Q2 from 7:30 a.m. to 9 a.m., and Q3 from 9 a.m. to 10:30 a.m., Q4 from 10:30 to 12 p.m. Applies the same logic to every single trading session. So the Asia session is gonna be split into 4 quarters, as well as London session and New York PM session. And finally, the microcycle, when each 90-minute quarter divides into 4 again, giving you roughly 22.5-minute microquarters. The microcycle is the most granular level, useful for precision entries on the lower time frames. Personally, I'm an intraday trader, so I focus mainly on a daily and a 90-minute cycle. That's where I find my setups. Okay, now let's talk about the true opens, one of the most important concepts in the quarterly theory. The true open is the opening price of Q2 in every cycle, and every single cycle has its own true open, session daily, weekly, monthly, and yearly cycles. Let me quickly break them all down for you. The yearly true open is the first Monday of April. The monthly true open is the second Monday of the month. Weekly true open, Monday at 6 p.m. So every single week, the Monday at 6 p.m., that's where we want to look for our true week open. And the daily true open is at midnight, which is 12 a.m. and shows up every single day. So every single day, you want to go to the very first candle of Q2 that shows up by 12 a.m. and look for our true day open. And the session true open, the opening price of the second 90-minute quarter within each session. Now, here's why it matters. The true open acts as a time-based premium and discount levels. If price is above the true open, we are in a premium zone. And from the premium, we expect price to reverse lower. If price is below the true open, we are in a discount. And from discount, we expect price to reverse higher. And then now, how do we actually use this? If you come into a new cycle with a bullish bias, you want to see price dip down below the true open first, take out some liquidity below Q1 lows, and then begin moving towards our drawing on liquidity. The dip below the true day open is a manipulation phase. That is your signal to start looking for an entries. And then personally, the two true opens I use the most are the true day open and the true week open. That alone gives me an extra confidence to determine my bias for the day. And the final key rule is high probability PRAs will overlap with the true opens. So when you see a fair value gap on an order block sitting right at the true open levels, there are high probability PRAs. Now, the next thing that we want to cover is the quarters function. In the quarterly theory, every single quarter has a job. And by applying if-then logic, we can anticipate what the market is most likely to do next. If Q1 consolidates, then Q2 will likely manipulate. If Q2 manipulates, then Q3 will likely distribute. And if Q3 distributes, then Q4 will likely be a continuation or a reversal. Now, there is the opposite scenario, and this is just as important. If Q1 expands, then Q2 will likely accumulate. If Q2 accumulates, then Q3 will likely manipulate. And if Q3 manipulates, then Q4 will likely distribute. This is the XAMD temple. The cycle is simply shifted by 1 quarter. Same logic, different starting points. And using ifs and logic, we can anticipate what the market is most likely to do next. Visualize all of these quarterly series cycles directly on the charts without drawing them manually. On the right side of the screen is a quarterly series indicator by day. You can find it on TradingView. It displays colored boxes below the chart. Each color represents a different quarter, so you can instantly see which phase the market is currently in. The top row, the boxes, show the 90-minute cycle. The bottom row show the larger daily cycles. In the settings, you can enable labels on each box, so you always know exactly which quarter you're looking at. This indicator saves a huge amount of time and keeps your chart clean and organized. And on the left side of the screen is my own indicator. The cycles here are fully synced to quarterly series time alignment. And at the top, you can see your current time frame and the cycle you're in. The indicator has custom labels for the monthly cycle. Quarters will be shown as Q1, Q2, Q3, and Q4. Going lower to weekly cycle, cycles will be shown as days of the week. Monday as Q1, Tuesday Q2, Wednesday Q3, and Thursday Q4. Going down to the daily cycle will be shown as session. when Q1 is Asia, Q2 is London, Q3 New York, Q4 New York PM. This indicator also includes all of the quarterly series concepts that you need for trading QT, SSMT, hidden SSMT, PSP, QCs, OT levels, and much more. You can get this indicator separately with 50% off right now on my official site. Link is in the description. Or by joining Premium Access, you get access to the indicator included as long as you have Espada Premium Access active. Now let's talk about the two main market profiles in the quarterly series, AMDX and XAMD. But first, why does any of this even exist? When the algorithm was designed, the whole point of it was to manipulate human behavior, to entice buyers and sellers into the market because they want to steal our money. And once you understand that, everything starts to make sense. So let's break down each letter. A. Accumulation. This is where price consolidates in a tight range. Nothing exciting happens, and most traders get bored and either don't trade or make mistakes. M. Manipulation. This is a Judas swing. Price fakes out in one direction, takes out stops, grabs liquidity, and then reverses. This is the algorithm trapping retail traders. D. Distribution. This is the real move. After the manipulation is done, price aggressively expands towards a drawing on liquidity. X. Expansion. This is either a continuation or a reversal of the previous cycle. Now we have two profiles. The first one is AMDX when Q1 accumulates, Q2 manipulates, Q3 distributes, and Q4 is a continuation or reversal. And the second profile is XAMD when Q1 is continuation or reversal, Q2 accumulates, Q3 manipulates, and Q4 distributes. Same four phases, just a different starting point.